welcome to Asking for a Trend. I'm Ines Ferré. For the next half hour, we're breaking down the trends of today that'll move stocks tomorrow. There's a lot to keep track of, so we're focusing on what you need to know to get ahead of the curve. Here are some of the trends we'll be diving into. The S&P 500 reached new heights Thursday as investors continue to comb through Nvidia's earnings results. Wall Street is also keeping a close eye on the public legal feud between Fed Governor Lisa Cook and President Trump. At the end of the session, all major indices ended the day higher. Auto tariffs may be driving consumer behavior when it comes to buying new or used cars. We're speaking with an expert to get everything you need to know if you're looking to buy a car or if you're investing in this space. And fans are investing millions of dollars into the U.S. Open, but one of the biggest champions is a cocktail being served off the court. We'll catch you up on the top headlines at the intersection of business and sports. And Nvidia closing the day down about 0.8%. The chip maker beating on the top and the bottom line, but falling short of data center revenue in the second quarter. Heading into the print, retail traders on Stocktwits, an online community for investors and traders, were bullish on the stock. And what are they saying after earnings? Joining me now is Tom Bruni, Stocktwits Editor-in-Chief and VP of Community. Tom, thanks for joining us. Nvidia, did retail traders get it right with Nvidia and AI?
Yeah, maybe not this earnings report in particular, but retail has been buying the dip since April around the tariff news. The DeepSeek sell-off from earlier in the year, they were also buying the dip. So they're big believers in kind of the broader AI trade, and Nvidia is one of their top picks. But expectations just got so high coming into this print. It's getting harder and harder for Jensen Huang and the company to kind of top themselves each quarter. And the stock was up 110%. Since the April lows. So expectations were quite high going into the print, and we didn't quite see enough to get people excited to keep buying.
Yeah, it's been surprising how much retail traders have really bought the dip when it comes to Nvidia. I mean, every single dip this year has been bought. Other areas of the AI trade, what are some of the other touch points that retail traders have been looking at?
Yeah, people are looking for value right now. If you look at Nvidia, it's up 1,700% from the fourth quarter of 2022. It's up 1,200%, over the last 18 months or so. So people are looking for the AI theme in general. They're looking for other areas and saying, okay, if data centers require all this energy, solar is going to play a role in that, so they're buying solar stocks that have been beaten down for a variety of reasons. They're looking at cybersecurity. They're saying, all right, AI infrastructure, cybersecurity is going to be key. They're looking at robotics. They're saying, okay, within AI, maybe there's a physical component of that, which players are going to be involved in that space. So people are still playing the same theme, but they're looking for areas where there's value. They haven't quite run up as much, and they can make the case for them playing catch up over the next 6-12 months.
And you really see it with the different sectors that have led the markets this year, including industrials, including utilities as well. A September rate cut, 25 basis point, is that a shoo-in for retail?
It seems like it. That's what the market is pricing in. That's what retail is betting on. If you look at the areas of the market people are investing heavily in right now, small caps are getting rotation. If you look at the riskier part of crypto, altcoins, Ethereum, those are getting bid. And so people are basically making the bet 6-12 months from now, whether it comes in September or December, that rates will be lower next year. And so we ran a poll, 80% of Stocktwits users expected at least a 25 basis point cut in September. Some of them expected more, 50 basis points. I don't think we'll quite get that, but the point is retail and the broader market is certainly positioning for lower rates.
Let's talk for a second about crypto, because you mentioned, so ETH and Ripple has been getting a bid, definitely also sort of outperforming. I mean, when you look at Ethereum versus Bitcoin, there's clearly been a rotation going into Ether. So talk to us a little bit about what retail traders are seeing with crypto.
Yeah, what traders look at is the Bitcoin dominance chart. So it's basically Bitcoin's percentage, the market cap of Bitcoin relative to the total crypto market. That's fallen from 66% down to 56% over the last 2 months. So that's a reflection of that outperformance from Ethereum and other altcoins. Now we're at this critical juncture where, Ripple, Ethereum, some of these other altcoins are testing their 2021 highs. So that's a key technical level. If we can get above that significantly and continue this momentum, then traders are betting on the broader crypto bull run to continue.
And Chinese stocks, those have been going higher. They've been getting a bid.
Yeah, so if you look at some of the popular ETFs, KWEB, MCHI, all of these are hitting 2.5-ish year highs. China is the one global market that hasn't really participated in this rally for obvious reasons, a lot of global headwinds, geopolitical headwinds, but the market is once again betting on value, betting that the geopolitical side will get cleared up eventually, and they're pricing that in now by going after Alibaba, JD.com, PDD Holdings. Like, these are names where even if we get some positive news from a geopolitical or global growth standpoint, these names will catch a bid. And so again, as people look for value, China is an area they're heavily focused on.
You know which sector has been lagging this year? I mean, healthcare.
Yeah.
Down 0.8% year to date, even though we've seen it rally recently. So what do you think is going on there? What are retail traders seeing there? And are the government headwinds that have been facing healthcare an issue here?
Yeah, healthcare is an interesting one because you've got both traders and investors interested. So if you look at XLV, which measures the healthcare sector relative to the S&P 500, it's at 25-year lows on a relative basis. So this outperformance has been happening for quite some time. But when you see names like UNH down 60, 70%, in a quick 1 year period, that attracts traders who are looking for mean reversion, looking for that short-term pop, but it also attracts fundamental investors that are saying, listen, I understand the fundamental headwinds they have, but this is a brand name in the space. They're not going anywhere. They pay a nice dividend. I get paid to wait for them to turn it around. And so we're definitely seeing a lot of people buy dips, especially in kind of those big Dow components and brand names in the space.
Playing catch up. Thank you so much, Tom Bruni from Stocktwits.
Thank you for having me.
Thank you. Stick around, much more Asking for a Trend still to come. Recent auto tariffs and the impending end of federal EV tax credits are quietly reshaping both new and used car markets. While automakers have shouldered billions in tariff costs, average new car prices are down about 1% as they've absorbed much of the cost to shield consumers. David Underkoffer, editor-in-chief at Autolist, a car guru's company, joins us now. Dave, thanks so much for joining us. We saw earlier this year when tariffs were announced, there was a bit of a pull forward because people were going to the car dealers just grabbing cars because they didn't want those car prices to go higher. What have we seen with tariffs and car prices when it comes to new cars and when it comes to used cars?
Yeah, thanks for having me, Ines. What we've seen really is not much, right? We have seen, really haven't seen material price increases on the new car side of things as a result of tariffs. I think, automakers, as you pointed out, the Wall Street Journal earlier this month said automakers have incurred up to $12 billion in costs related to these tariffs, but they're very loath to pass those on to consumers. So I think there's been a bit of uncertainty and volatility, and it's been a dynamic situation regarding how big these tariffs are going to be, what country do we have trade agreements with. So it very much been in flux, and while automakers are waiting for all of that dust to settle, they're really not touching prices, or they haven't up until this point.
And why is that? Is it because it's just so incredibly competitive, because margins are so slim, because consumers just don't want to be, are not in a position perhaps to be paying for higher prices, or they'll balk at those higher prices?
Yeah, well, I think part of it is no automaker wants to be the first to raise their prices because of tariffs. That would sort of incur unwanted attention. No one wanted to do that first. I do think we're at a really interesting point right now in the calendar year, and the automotive sector is very unique because they have model years. So we are at a point right now where the 2025 model years are rolling off of dealer lots, and what's coming in is 2026. And that gives automakers some coverage in a way that no other segment or sector really has, is you can have two identical vehicles. If one was 2025 and one was 2026, everything else is the same about those vehicles. Consumers, we are sort of conditioned to expect there to be just a normal price increase from one model year to the next. And that is giving automakers, I think, a little bit of coverage that, like I said, almost no other sector has, is that now you may start seeing automakers start to roll in some of those incurred costs into their vehicles, because it's not necessarily.
And it seems like we may have lost David there, or his sound. David, yeah, we may. Okay, David, you still there? All right, it looks like we may have lost David's sound there, but talking to us about the tariffs and the impact on used cars and new vehicles, and saying that there was not much of an impact yet, but for the next year's models that you could see those prices go higher because consumers are expecting prices to go higher with the new model. So we will try and get David back up, but stick around because much more is up ahead, asking for a trend still to come. Stay with us. College football is kicking off this weekend, and fans are already paying a premium to see their teams take the field. For more, we're bringing in Joe Pompliano, host of the Yahoo Finance Sports Report. Joe, thanks for being with us. What are you expecting this season, and what are ticket prices looking like? They're up, I gather.
Yeah, thank you so much for having me today. It's going to be an exciting season. People always talk about the biggest sports leagues in America. They typically say the NFL, then the NBA. But if you want to count college football as a professional sports league, it would be 1B to the NFL. It has gotten tremendous over the years, especially with the rise of NIL over the last couple of seasons. And we're seeing this in ticket prices. I mean, opening with week 1 this weekend, we have Texas visiting Ohio State. The get-in price for that game alone is going to be a few $100s, with the average ticket price up around $500-600 for this weekend's game. Most people are excited to see Arch Manning. I get that. But then if you go down throughout the calendar, a lot of the rivalry games, ticket prices have continued to increase over the year. You have Oklahoma at Texas at nearly $900, Alabama at Georgia, $879, Texas A&M, Texas, same story. So we're seeing ticket prices that exceed NFL games in a lot of instances because college football fans are so excited for the new season.
Joe, let's shift gears to the WNBA. Nike is giving Caitlin Clark her own logo and signature shoe. What can you tell us about that, and how big of a moment is this for women's basketball?
Well, it's a big moment, and it's been a long time coming. I think a lot of people have been waiting for this since Caitlin Clark entered the WNBA. People forget that she signed that deal with Nike, the signature shoe deal worth reportedly $25 to $30 million, depending on how many shoes she sells, before she ever played a game in the WNBA. So people have been excited about this for a long time, considering that was more than a year and a half ago. They've now released her logo, which was the first step. Next will be a signature collection where that logo will be on apparel coming later this year. And then next year, we will finally get the signature shoe. This is obviously big for Caitlin Clark in the WNBA, but I would argue this is also big for Nike, whose stock has been struggling over the last number of years. Elliott Hill comes in or returns to the company as CEO. He has specifically mentioned multiple times that he wants the company to get back to its roots, really championing professional athletes and using them to sell every other product that they have. Caitlin Clark can be a huge asset to them in that area.
Yeah, and it's a cool looking logo. Let's talk about the US Open that's happening right now here in New York City. The Honey Deuce has become an iconic drink at the US Open. So you have some numbers around sales. What's happening there, and what is that drink like? Because it sounds potent and it sounds like it has honey in it.
If you haven't had a honey juice at the US Open, you need to, because it's fantastic. I don't drink a lot, but I enjoy them when I'm there. And it's really become sort of a cultural institution in sports over the last decade. If you think about sponsorships in sports, a lot of times there's naming rights deals. There's some other things around the events, the players, whatever it might be. But Grey Goose has done a fantastic job really integrating themselves within the US Open at a larger scale. In 2006, they actually came up with the idea for this signature cocktail. Now, this isn't a totally new concept. It has been done at other sporting events, but what they've done is they've really elevated it, and they sell a lot of them. They sold 556,782 of these honey deuces last year. Now, if we want to exclude people that are under 21 that go into the tournament, that means the average person's drinking about 1 or 2 of these every time they go to the event, which is an astronomical number, especially when you consider how much they cost. They're $23 a pop, which comes out to $12.8 million in sales last year. Now, if you think about what they've been able to do and how fast this is growing, the US Open actually increased the price from $22 a drink to $23 a drink last year, and they sold 100,000 more drinks. So there really seems to be an unlimited demand that can't be caught up to right now. They could raise the price $2, $3, $4 more, and they're still going to sell a lot of these. It's probably one of, if not the most impactful signature cocktails in all of sports from a sponsorship perspective, and it doesn't seem to be slowing down anytime soon.
Joe Pompliano, host of the Yahoo Finance Sports Report. Thanks so much for joining us and for telling us about the honeydews.
Thank you for having me.
And that's a wrap on today's Asking for a Trend. Be sure to come back tomorrow at 4:30 p.m. Eastern. Have a great night.